Good morning, Steve Freed in Chicago with the morning grain comments. Grain prices are sharply higher. We've got soybeans September up 24 cents at 14.53. November's up 18 cents at 14.20. Soybeans up 2 cents at 68, while meal's up $5 at 4.31. September corn's up 25 cents at 5.52. December up 25 cents at 5.61, I'm sorry. We've got Chicago wheat up 40 at 7.38, KC 36 at 8.97, and Minneapolis 33 at 9.20. Two headlines overnight. The Russians attacked the Danube river locations. That was the outlet for domestic exports out of Ukraine. They were going to rail to those areas and ship 2 to 3 million tons of grains per month. So continued infrastructure bombing of Ukraine ports. So on Friday, it sounded like Turkey, the UN, was going to try to broker some kind of deal to open up Ukraine exports. But certainly today, it looks like Russia does not want that to happen. We also have to look at weather. The first week of the Midwest here is going to be dry with temperatures warmer than normal. West of the Mississippi, you could see temperatures 95 to 100 degrees, with the east maybe 3 to 5 degrees cooler than that. When we look at the second week, we will see closer to normal temperatures. West of the Mississippi, we'll see below normal rain. East of the Mississippi, especially Kentucky, Tennessee, Indiana, and Ohio, will see above normal rains. When we look at some of the private guesstimates of the supply and demand, we've got one group that has exports of beans down 40 million bushels from the USDA, but a yield of, which means that you've got a 296 carryout versus 255. For 23-24, they've got a yield of 50.5 versus the government's 52. Exports 30 million bushels lower, while the crush is 20 million bushels higher. So you got a 225 carryout for 23-24 versus the USDA's 300. And I think that's friendly to the marketplace, especially if the yield comes in below 50.5. For corn, it's kind of the opposite. People are taking exports down 25 million bushels, so you've got a carryout of 1417 for this year, whereas the government's 1402. You plug in a 175 yield and you get 2.3 billion carryout versus the government's 2262. With exports at 1900 versus the government's 2100. If you go to a 173 yield, you have a 2.1 carryout. So we really need to get below 170 for the corn market to rally significantly. Farmers want $6 futures in order to start selling new crop cash. And in the wheat, we see a little bit lower domestic usage and a carryout of 617 versus the government's 592. Funds right now long 96 beans, 61 meal, 51 oil, short 44 corn, and short 48 Chicago wheat, and probably adding to some of those long positions in the beans today, soybean oil, and taking off some of the short positions in corn and wheat with the Russian situation and the U.S. Midwest weather.